Hey, what's going on, everyone? This is Sawcruhteez Streamz, and I am your host, Sawcruhteez. I have a very exciting show planned for today. A lot to talk about. Has been a busy morning for myself. Have been buying a number of coins, starting with Bitcoin, and then also looking at some alts. And I'm going to be covering basically where I've been buying, where I'm looking to continue to add on to that position, and then also going to be finishing off the show discussing some gold miners, which I am going to be buying as well when the market opens tomorrow. So like I said, a lot of things to talk about. Should be a great show. I appreciate everybody for tuning in, and I really appreciate all the new subscribers, getting very close to that 5,000 threshold, so that is really exciting. Anybody that hasn't subscribed yet, I would ask you to do so, and I would really appreciate that. Okay, so that being said, let's go ahead and share my screen. I need to turn my fan off real quick, 1 second. All right, that's better. Okay, there is the Bitcoin chart. We'll definitely be excited to dive on into that. Before, let's go over to unconfiscatable.com. Only a couple seats left in the workshop that I have scheduled for, what day will it be? The 21st. I will be presenting a workshop on advanced consensio at Unconfiscatable. And just coming over here, here we go, at unconfiscatable.com, you see workshops available. If you click on that, internet is sure moving slow today. Not sure if that's on my end or what. It'll bring you to this over here, and we see only 2 seats are left. So that is going very well. This will be my first workshop doing by myself, and I was really wanting to sell it out, and it's looking good. So anybody that's on the fence, I would encourage you to go ahead and jump right in. With only 2 seats left, I think we will be able to get those sold. And for $500, you'll get the workshop, and that also includes some other things. First of all, it will get you a year access to the MSR indicator. We'll also get you a year access to the Telegram group, and then also included with that is going to be the original Consensio workshop with Tyler Jenks. So everybody that's signed up, I am going to be sending an email today with a link to that, so that you can watch that original workshop before diving into the advanced Consensio. So a lot of great stuff that you'll be getting with that $500 ticket, and I'm really excited about it. It's going to be a really good workshop for sure. I'm going to cover a lot of really important things, and I think provide a really good foundation for people who are wanting to learn how to trade themselves using Consensio. So really looking forward to that, and thank you everybody who has already signed up. We'll really look forward to meeting you out there. All right. So now that we've got that out of the way, let's take a look at why I was buying some Bitcoin this morning. Let's draw this on the daily, and then we'll come back to the 4-hour. So let's see here. What I would like is to get this close below and then also get this to touch up here. I think that is going to be the best way to draw it. And then on the lower end, we've got all closes above and this coming down, creating another touch point. So there's the channel as I am drawing it. And here we are on the 4 hour. So that's what I was buying, is this confluence of support from this horizontal and the trend line, or the bottom of the channel. So had orders set at, let me see here, figure out exactly where I was looking, exactly where I got filled. 1 second. Okay, 96.71 and 97.51. So 96.71 right here, and 97.51 right here. So those were the two orders that I had set. Both were filled, and basically what I did was I had sold some in here at 99, and I bought that back, and I also bought some more. So I guess right now we can get into exactly how I'm looking to build a position. I'm looking to make 3 separate entries, and I'm not looking to make once I make one entry, I'm not looking to make the next entry until the stop has progressed and to break even. And that's a very important concept, and I think a really, really good approach to build a big position without risking more than 2% of your bankroll. So first entry was right here at 8,000, and then bought the dip down to 78. So first entry was right here, and that I was estimating a 10% risk. So I entered 25% of my bankroll, which gave me an estimated of 2.5% risk, which is absolutely on the highest end of what I'm wanting to risk on a single entry or a single trade. So I entered 25% of my roll, estimating 10% risk, which if I was stopped out, I figured I was going to lose about 2.5% of my bankroll. So that left me with you know, a big chunk of my bankroll remaining, and so what am I going to do with that is I'm going to be scaling in when the stop has progressed to break even or better. So once when we were right here, I was very interested in buying and viewing this as a really good opportunity. We had this falling wedge. We had a 9 on the TD sequential on the 4 hour. I posted that on Twitter right here. So this was a spot that was really interesting opportunity, but I didn't feel like I could go ahead and enter because my first entry was still at risk. If it broke down from here and I got stopped out, I would have lost some money. So I didn't feel like I was able to go ahead and add because my first entry, the stop hadn't quite progressed to break even. So after this is when I started to want to look into adding into my position. And on this dip, I didn't get any of it because I was expecting it to come down below 9,000 and to come test this trend line kind of right down in here. I was looking to go ahead and buy in here. At this point, I felt the stop on my original entry had been moved to break even, so therefore wasn't risking anything at all anymore. If I got stopped out, if here it broke down and stopped me out, I would have gotten out, I think, at a small profit. So here I was able to go ahead and add without risking more than 2.5% of my bankroll, but I didn't catch any of it. Missed it. Didn't see this as the opportunity to buy. So didn't get in on any of these, and now I am looking to make that second entry. Now my stop is in profit on the first entry, so what I can do now is make another entry with 25% of my bankroll. Again, this is about a 10% estimated risk, so I can put in 25% of my roll for a second time. And now if this gets stopped out, this position will lose about 2.5% of my roll. The original position will make a little bit, so I'll actually, if everything breaks down and I get stopped out on this trade, I'll lose less than 2.5% because I'll have a little bit of profit from the original entry to offset losses here. So that means I can actually enter a little bit more than 25% based on a 10% risk, and not risk more than 2.5% of my roll. If everything plays out perfectly, I may do so. Because for me, what matters is not risking more than 2% of my roll, 2.5%, and that's what I focus on. And because I've got some unrealized profit with my stop trailed, I can count that for what I would be risking. That's not, hopefully that makes sense. If, say, the first entry is up 0.5% of my roll in here, then I can take that 0.5% and say, okay, I can risk maybe 2.5%, maybe even 3%, and still be only risking around the 2 to 2.5%. Hopefully that makes sense. So that's my game plan, is doing that 3 times. Make one entry, let the stop get to break even or better, make a second entry if everything goes well, let the stop get to break even or better, and then make a third entry doing the same thing. Thus, at the end of the day, if everything goes how I want, I would get a 75% of my roll entered, and without ever risking more than about 2.5% of my roll. And that's my game plan. That's what I am looking to do, and I think this is my opportunity to go ahead and take that next shot and build that next portion, position kind of number 2, entry number 2. So that is what I am looking at doing. Had those orders set down around here to buy, and I would really like to see this area of support hold. What I'm looking at would be something along something like that would be pretty ideal for me. I guess we will have to go without the arrow. So this would be awesome, I think, right here, where we kind of bounce off support, resist the 50 EMA on the 4-hour, come back, find support from horizontal and trend, get another bounce, and then come back and like kind of create a higher low right here. Potentially could give us some sort of Wyckoff that I'll be keeping an eye on. When I see action like this, I definitely start to think about Wyckoff as we get the kind of preliminary support and selling climax. If we can bounce and retest resistance here, now it would start to kind of be taking shape, and that would sure be lovely. So if this situation kind of happens, if we bounce here, then I probably would be going ahead and looking to add again. So I talked about looking to enter 25% of my roll here around these prices, and I've got about 33% of that portion entered on those last 2 orders. So I still have 2/3 of this position that I'm wanting to build. And I've got a couple game plans. Basically, I've got orders set in here. If we do break down below this trend line, I'm going to be looking to buy it, and that is because of this moving average. The 200 EMA on the 4-hour chart is my #1 favorite place to buy a dip. It's just a great place to buy dips. We haven't gotten there yet on this run. We have continually found support above that, but that's an area that I am absolutely very interested in buying. So 9,300, big order set there. And then also looking at kind of like 94.75. So if price gets there in the next few days, you bet I'll be buying it. If it takes longer than that, I may be kind of reevaluating. But we are coming up on a lot of support, and buying support in bull markets is my preferred approach for entering. I don't really like buying breakouts nearly as much as I like buying corrections. So this right here is an area that I'm very, very interested in. Basically 93.30 to 94.75. If we get there, then I'll have the rest of my position entered, the rest of that 25%, and I'd actually probably go a little bigger because this would be such a good risk reward. It would actually be a little less than 10% risk if we get down here. So therefore I could actually look to enter maybe 35% and only risk about 2.5%, which would be excellent due to the proximity of the halving. This is absolutely a time that I want to be betting big, and that's just the bottom line. Betting big without risking more than I can afford to lose. Okay, so this is what I am kind of looking for. Is one of these two things to happen. If one of these things happens, I think I'll be very ready and be able to execute well. So we've got kind of two options. Let's do different colors. Let's do yellow option is ideal because I would really like to see this channel hold. If we do break down this channel, it does get scary. I do not like when a trend line gets broken down. That is a sign of a reversal, and that would be a problem. But it would just the risk reward on buying there would just be too good to pass up on as far as I'm concerned. So I would be very worried if we broke down this trend line. It wouldn't be a good sign, but I would still just have to buy. And often the best opportunities to enter are when you are kind of worried, when you're not really feeling great about it. Those are often going to be the best opportunities. So breaking down a trend line is absolutely not a time where I'm generally looking to buy, but that is why I am so fond of trend lines that are surrounded by moving averages. When you've got a moving average below a trend line, it's like reinforced support. It makes the support much stronger, because to break this down, you have to break down the trend line and the moving average, which is a lot harder to do than just one or the other. And being that the 200 EMA is my favorite place to buy dips, I would have to just be going ahead and kind of hoping that the breakdown of a trend line was a fake out. And if that were to occur, if we break down this trend line and come and retest this 200 EMA, then I would love seeing something along these lines where it's like you throw back and retest the trend line for resistance, and it looks like it resists, but then you create a higher low off of this support. If it did that, that would be looking really, really good. If it instead chose to do that, now it's a problem, and it's a serious problem because of the proximity to the halving. If we were to break down this 200 EMA on the 4-hour in the couple months before the halving, it would be like, what in the hell is going on? Obviously it could happen. I mean, for sure anything can happen. But it would be very, very surprising to me, and it would really make me rethink like almost everything. I'm very, very bullish over the next few months leading into the halving, and if we don't rally leading into the halving, it'd be the first time ever, and it would be, and when that type of stuff happens, you have to kind of sit back and say, what in the heck just happened? Why did we not repeat history? It would be a really bad sign if we do break down 9,200. yeah, if we break down 91.50, it's going to be ugly, but I'll be prepared. I'll have a stop in place. I'll be surprised and confused, but it won't cause me to be like paralyzed. I'll be knowing exactly where my trade falls apart, and that would be below 91.50. So if we do something like that, then here I'm just getting out and I'm taking my loss and moving on with my life. So I'm fully prepared for things to move against me, but I'm not expecting that. I am and would be very surprised and would have to really rethink everything about my analysis for my targets over the upcoming months. Okay, so this would provide me the best risk reward on an entry, and I would be looking to bet very big. I would be looking to expose a bigger percentage of my bankroll because the risk would be less. As price comes down, risk decreases. My stop is where it is, and price coming towards it means that there's less risk, and therefore I can expose a bigger percentage of my bankroll without risking more than the 2.5%. Okay, and what I'd prefer, even though this would provide such a good entry, I would much prefer this yellow line, just because that would a lot more would line up if we can continue, this trend of breakthrough resistance, create a new high, throw back, turn prior resistance into support, breakthrough, new local high, throw back, turn prior resistance into support, breakthrough, and now throw back and turn prior resistance into support. Let's get this guy out of here now. That's what we want to see. We want to see us continuing to make 2 steps forward and 1 step back. 2 steps forward, 1 step back. Turn prior resistance into support. So as long as we're above 94.50, that would be, let's say it's 95, we would be turning prior resistance into support. And if we're even above that, that's even better. It just shows that people are kind of front running and moving up. And if we fail, I mean, we could say that threw back to retest this resistance for support. And then if we can continue to kind of consolidate above that, we might turn into some sort of head and shoulders pattern that may get a lot of people worried, but I wouldn't be myself. I would be thinking everything's looking good. So this is what I'd really like to see. And if this happens, I will be looking to say we bounce from here up to like 99.50 and resist. Then I will be looking to buy another test of support here, 9,800, 97 to 98 would be looking to buy here. And then if we did form some sort of Wyckoff, maybe looking to polish off the position there. Okay, that pretty much covers it. One thing to share very quickly is an article on TradingView that is out there for free. Anybody that wants to learn more about how I try to recognize dip buying opportunities, there is, looks like it was adding some people to the indicator this morning, so appreciate everybody who signed up in the last 24 hours. Okay. Oh, this is a good segue because this is the next chart that I wanted to cover. Okay, so if you come over to TradingView, click on any of my ideas at the top, you're going to see a link to that says how to buy the dip. These are 2 very important articles for people out there who don't have a very actionable plan for entering into Bitcoin in bull markets. Two approaches that can be utilized. One is dollar cost averaging. I go over some various dollar cost averaging methods in advanced dollar cost averaging methods post here. And then the other is how to buy the dip, which is my preferred approach, using kind of what I outlined earlier today. So here in how to buy the dip, I share multiple strategies. I share the one that I use, that I'm using right now, with moving averages and horizontals, looking at the 200 EMA on the 4-hour, looking at trend lines to be in line with the moving average as a great opportunity to buy. So I do think that I ended up getting in somewhere around up in here as price progressed. And let's go ahead and just take a look at that very quickly. Not necessarily to toot my own horn, but just to show some hindsight examples of what it's like buying the 200 EMA on the 4-hour, why I believe it's such a good opportunity to buy the dip. So right here we got the cross, just the perfect textbook setup right here with the bull flag consolidating above the golden cross, absolutely textbook. So maybe enter there, and then I can look to buy pullbacks as it retests that 200. This one got very, very close, and if you were using horizontals in combination with the moving average, kind of like I was showing, and setting bids around there, maybe your lowest one wouldn't have gotten filled, but maybe you would have had some others that did. Right here, covered this live on air on the Hyperwave channel as it was forming a Wyckoff pattern, testing the 200 EMA on the 4-hour. That is textbook right there. Support here. So there we see that, and here's a good example of exactly why this is my preferred approach. Say we bought this, we would be looking at a losing position because we wouldn't be selling here. We would be looking for new local highs. We wouldn't be necessarily expecting the run to be over. We would be buying here and then holding on through a death cross would be the dip buying approach. So if we bought here, maybe here too, like looking at horizontals, and here, so like an average cost basis right around here, we hold on, position goes against us, here's our exit, and we get out at break even or probably even a little bit in profit. And that's exactly why I love these moving averages and to buy the dip. And this is something that I'll be covering in depth in the workshop about how when you buy a pullback here, when you have a good strong trend with the angle up and a good spread in these moving averages, when you buy that, it represents a very, very low risk opportunity because for these to cross, when they're diverged like this, it's going to take time. And generally, as that time occurs, this continues to move up, which means as that time progresses, it's moving in our favor, and the cross will often get us out at a better price. So it's a situation where you buy not because you're super confident that you think this is the bottom, but you buy because you think that it's a really, really good risk reward. And that's exactly what I was talking about right here. Okay. So yeah, come give this a read. I think it's a good article, and this is the other approach, would be using Bill Williams fractals with trend lines. Both approaches work great. And if you are not into as actively buying and selling, then dollar cost averaging is the way to go. All right. Now, a chart that I'm very excited about. Right here. So this is comparing the, and I think for whatever reason, it's just going to be better to view on Twitter, so I'm going to do that. Give me a second, it'll be worth it, I'm sure. Appreciate you guys for liking and retweeting. Much appreciated. Oh, another one right there. How cool. Will you take me to my profile? There we go. Okay. So Bitcoin's halving right around the corner. It's a great time to take a look at what happened in the months immediately preceding and following the last halving. In 2016, Bitcoin appreciated 81% 3 months before it halved. A 40% correction followed, and then we mooned. This was posted a couple days ago, and at that time, we were about 3 months away from the halving, 87 days. So here, let us compare what happened in 2016. So right here was the 3 months preceding 2016, right in here. And notice, so I said that it appreciated 81% in the 3 months kind of leading up to, but really it was just the 1 month before. We were kind of stuck in this consolidation. It was an ascending triangle going straight sideways. And about 1 month before, excuse me, it started about 6 weeks before, and it topped 2 weeks before we actually halved. So here, 6 weeks before the halving occurred, we popped, and we appreciated 81% in the matter of a month. We then corrected 40% back down to a parabola line that was just kind of taking shape, and the correction started 2 weeks before the halving occurred. That's where the local top was. So what I've been talking a lot about recently is buying the hype. Right here's where you buy the hype, here's where you sell the news, and here's where you buy the dip. So we're buy the hype, sell the news, buy the dip. And here was the fractal that I put together for current price action. Went ahead and penciled in a parabola using this low from December 2019 and this low from December 2018. And what I was really looking for was first a pullback, which we're getting now, to find support above 9,000, and then take off 1, 2, 3, 4, about 4 weeks before the halving, making most of the appreciation. Maybe this should go kind of a little slower right through here and give us like an ascending triangle, and then just these 4 candles, but close enough. So, and then we get up top 2 weeks before, and if we go up 80%, then it would be about 18,000. And a 40% correction would bring us down to about 11,000, if I am remembering correctly. Let me take a look. Geez, it's already been a half hour. This is going to be such a long show. Goodness gracious. Okay. 18 times. So 10,800 would be a 40% correction, and then forming some sort of like bull flag on the pullback that finds support at the parabola is would be the absolute most ideal situation I could imagine, kind of coming back and turning prior resistance into support. Would just be absolutely beautiful. So yeah, that is what I'm looking at, and it is right in line with kind of the last chart that I posted, looking at price to continue this same angle of attack, and if it did, it would take it right up to this critical horizontal near the halving. So getting up to around 16 to 18,000 by May. And then getting a nice ABC correction back down. This has an angular trend line. I like the parabola better, but both will be something to keep my eye on. Oh my goodness. Not receiving data from the encoder. Oh my gosh, this is frustrating. So does that mean stream froze? Okay, what do I do? So if it's not receiving data from my encoder, fuck, I don't know what to do. I guess I might have to just start all over. Let's try this. Okay. It says back on, good to go. Back. It tells me bad. Okay, I guess tells me bad connection, but people are saying I'm back on. Okay, I'll just keep going and keep my eye on that. I guess bad connection is better than no connection. Okay, so let's just move on forward. Take a look at some alts. Thank you guys for your patience and for sticking with me. So yeah, this channel is looking beautiful to me. Just absolutely what I love seeing. Okay. ETHUSD, Ethereum has kind of been stealing the show lately, which is not what I was expecting, but I was exposed, so I'm very happy about the move that it has been making. And it was on Tone Show a couple days ago, covering the hyperwave fractal. And I will draw that for you guys here very quickly. Hyperwave book is off to the publishers. Leah and I sent off the final copy. They should have everything that they need at this time, and that's very exciting. Very exciting news. We should be ready to go in 3 to 4 weeks with a published copy of the Hyperwave book, and I am really excited about how it came together. I'm often my own biggest critic, and I was really kind of worried about going back through and editing it after not reading it for a handful of months and just kind of thinking that I was going to be very disappointed with how everything was looking and not very excited about it, but that couldn't be further from the case. I really am excited about how this is coming together. So, Hyperwave Fractal doesn't really tell us that it should return to phase 1 or anything like that. All that I do is look for it to follow the pattern. Phase 1 is down here around 155. I don't expect a return there. I do expect an ABC correction, though, that gives us a 5, 6, and 7. And it would be really cool if that was able to find support somewhere around a phase 2 line, like here. That would be nice. I would love that. That'd be perfect. That's what I want right there. So yeah, I do think that this thing should get a bounce to 260, 265 before it comes down and breaks down below this here at 238. And if this trend line holds, that would just be perfect, because there's a lot of other stuff going on around 230 that we'll be taking a look at. So did definitely take some profit at 260. Right here, I actually was originally looking at that as phase 4 and thought this was the breakdown. When you get a new high, that tells you were wrong. So then I adjust it. So I already had sold here, but adjusted the trend line and could have sold more, but I didn't. Okay, so that is the interesting pattern that I am keeping my eye on. Let's see. Let's keep my eye on the stream. Looks like it's still working. Let's take a look at some horizontals. I mean, look at that bottom. How beautiful is that? I mean, that's what I was wanting out of Bitcoin. Not Ethereum. It's like, what in the heck? Like, holy crap. Just this thing is very interesting. That would be a heck of an angle to take off at. It's one thing to have a parabola, it's another to have one at that angle. Like, that's still a parabola, and that's a much more reasonable rate of progression. This one is like the steepest one I've probably ever drawn. I mean, that's just crazy, but it's a very good fit in here and all the way through here. And it would also be a good fit with kind of that ABC correction that I was looking at, kind of back to the phase 2 around 230. So this is definitely something to keep an eye on. And something else that I did buy, and I do have more orders set, very similar to Bitcoin. Okay. Going to try to move along quickly here because has been a lot of time. So would just absolutely love to see. No, it pooped out again. Gosh dang it. Okay, it's just cutting in and out. I apologize. Somebody in the chat said that YouTube may be having problems. I've sure been having trouble myself. Let me try to disconnect from my VPN. That can. Doesn't look like it's working. Okay, now it is getting data. It should be working now. Super frustrating for me as well as for the viewers. It should be working now. It does say it's getting a bad signal, so let's just go ahead and keep going. So what I really want is this moving average, 200 EMA on the 4-hour chart, to come up and line up with that parabola. It just kind of keeps progressing in the way that it is progressing. It would provide an excellent opportunity to buy, as far as I'm concerned. So that's what I'm looking at. Got orders set from 225 to 240. One of them got filled on this move. My order at 240, I had 236 that just barely missed, and then like 232, 230, 225. So I just stack orders and hope that they get filled, and sometimes you get all of them, sometimes none, sometimes one. That's what happened here. Very, very interested in buying Ethereum 225 to 250. Okay, we good now, good. All right, so yeah, very interested in buying Ethereum from 225 to 250, and the main reason is going to be the volume profile, visible range, which tells us where the most volume has occurred at what price. So we want to get in all this price action from above kind of 100 basically, and what we notice is these big high volume nodes here at basically right where we are. This is where we have a lot of volume at these price levels. Point of control is 160, but the big high volume node here at 225. Basically, if we take out that ascending triangle from 2017, that's the most volume. It is between 100 and 243. So being above 225 is very important for a number of reasons. Ooh, now the stream quality just went to good. I'm knocking on wood. I don't know what happened, but maybe we can get through this. So yeah, big volume and big dip buying opportunity for me. We got this golden cross with price extended, so I look to buy that next correction. Here I don't want to be buying crosses with the price that's extended. I want to wait for the following correction. And let's mark up our horizontals. I've got one there. And here. So some nice horizontals from 225 to 240. Yeah, I shouldn't be saying 250. I think it's 225 to 240 is really where I'm interested. So we would have horizontal support, parabola support, and moving average support on the 4-hour. So anywhere in here, I am looking to take out a significant position. I did get in here the recent signals on Ethereum. Telling us to short 176, to close a short 142, and to long 148. I did get a really good entry there, buying 148 and then also buying horizontal support at 142. So 145 is my cost basis, and that worked out really well. And then I trimmed first a little bit here, and then more here. Already rebought what I trimmed here at that 240. So I am looking to continue to buy back. Would love to get back what I sold here at the same price. If I have to pay a little bit more, that's fine. But yeah, definitely wanting to increase my exposure to Ethereum. And now this original position is very well in profit, so I can definitely go ahead and take another stab. This is a good time to do so, and we'll be looking at the horizontal support as well as horizontal resistance. This would probably be the next area I would look to trim if it does end up getting there. I think it will, but you never know. So that would be the next area I'm looking to trim, and then basically immediately re-enter if it breaks above there, because, and this is an important concept that I was meaning to talk about today, so we can discuss this very quickly, is that what I look to do is sell resistance and buy back if it looks like it's becoming support. So if we kind of pull back here and then rally to here, we have resistance at 350 to 360. And I would be looking to sell. And then if we kind of say do something like that, maybe I don't get back in here, it doesn't dip as much as I want, or maybe it just goes straight through, then I would be looking to re-enter when it becomes support. So selling when it's resistance and looking to re-enter when it becomes support. And that's exactly what I did on the Bitcoin position. So let me just take a quick look at that. Stream still looks good. And I guess I'm just not going to care too much about how long this goes because there's plenty to talk about. Okay. I talked about selling 99 earlier, and it was basically that exact concept. We were at a area of horizontal resistance right here. It was, support, resistance, and then as we're coming back up to test it, it's resistance right here. So I sell, and then price moved against me. So I put in orders to buy it back on a retest for support. Maybe it doesn't turn out being support. Maybe we do break down and that was the top and we just keep going down. Sure, that could be the case, but in that case, it's basically net nothing because I could have just held on, or selling and buying back at break even. It's like I pay a little bit in fees, which is completely irrelevant for when I'm trading longer time frames. So that's what I look to do is sell resistance and then buy back cheaper, or buy back when that at similar prices when it then looks like it is becoming support. Okay, so only other thing to talk about is the beautiful Big W in Ethereum. That's just absolutely textbook. Hasn't confirmed yet, but I mean, it is just the prettiest dang Big W I think I've ever seen. And it's interesting because this was probably the prettiest dang ascending triangle I'd ever seen. Okay, so Big W is confirmed with the break above here. If you do break above here, the target is here. So it'd be a big target that I would have no problem going after because Big W patterns are very reliable, over 70% when they confirm get to their target. And we've been seeing a number of other alts that have this same pattern that have already reached their target. So that might be foreshadowing what is to come. And so yeah, basically wanting to buy this dip, and then also very interested in seeing what happens if we do get back up around here. If we can break through that, we would have some big targets. Let's take a look at ETH BTC. So I think I shared, orders set basically from 225 to 236. Had one filled at 240. ETH BTC has confirmed its big W. It's a much smaller W, but target is 0.035 nonetheless, with a breakthrough up here. And we need a little bit more history here. Okay, so very critical area for ETH BTC. As long as it can, if it can get above this, then it should be off to the races. This is just absolutely critical. If it rejects this, look out below for sure. And if it is able to get back above here, that would be a huge sign. And it got above, and now it's kind of pulling back. Let's look at some normal candles. Look how ugly that is. So it closes above and instantly reverses. So this was a situation where I kind of botched it a bit. We got a long signal on MSR at 0.021. I didn't take it. I really thought I'd be able to get a better price. We were, so right here, we were at horizontal resistance right here. we had just made a big move, and I just was not interested in buying that. I was interested in buying a pullback that never happened. So now I'm kind of on the outside looking in. Well, I was until this morning. Did just get an order filled. Let's see here. Taking a look. At where my order was set. So I was viewing this as support, and had a couple orders set at 0.025. Kind of looking at these guys here. And yeah, those both got filled, 0.025. Still risking like less than 1%, just kind of building a smaller position. This is a situation where I'm not interested in betting big like I am with Bitcoin and Ethereum. This is very hairy. If we do get back above 0.0265, if we're able to maintain above here, now it's in a position where, okay, it's in a setup that may justify a big position. But right here, definitely not. I mean, we're could very easily reverse from here. This very easily could just be thrown back to retest prior support for resistance. If it does break down, then, I mean, it's just like basically 50-50 in my mind, that it can either resist or break through. I don't really have a strong opinion either way. And when we're testing a very, very critical level, it's just not a time to be building a big position. I really like Litecoin. Didn't have orders set to buy it. Maybe I should have. There's a lot going on. But looking to buy, pull back into a golden cross here. Haven't quite gotten there yet, but this is probably an area where I'm going to be setting some orders to buy some spot around 64 to 67. Looks like a very attractive place to buy some Litecoin. $200 EMA on the 4-hour has been working like a charm. Right there, right there, and right there. So yeah, basically 67.50 down to 64.25. Ton of support. Great area to be buying. And if it goes against, I think the risk would be pretty nominal. That's my perspective. I think it's a very good risk reward. Let's go ahead and get rid of this. I am definitely going to start moving a little faster. Let's take a look at everybody's favorite, XRP. So I'm very much, especially when crypto starts turning bullish, is a very big proponent of just putting beside what I believe, what I think, and just trading a chart, and just basically saying that I don't care what the ticker is. I do care if there's enough liquidity, is kind of the thing. So as long as a market is liquid enough and in a good setup, then I don't really care what it is. And something to keep in mind actually is that often the most hated coins are the ones that pump the hardest. Bitcoin Cash and XRP are perfect examples of this. When you're got a market that's just really, really hated on, that means that people probably aren't in that market, that the supply is controlled by the people who really do believe in it, and the people, there isn't anybody that kind of believes in XRP. You either really do or you really don't. So it's a situation where there's a lot more room to the upside when the people that really do believe in it, they've been taking shit for so long, and then it finally moves in their favor. They're not ready to take profit. They're just holding on, and then also the founders lock up a lot of the supply, which just makes it really affects the supply and demand, and makes it such that weird things like Ripple and Bitcoin Cash often move the most. And this is a pullback and into a potential golden cross, which is pretty darn sweet. And could be establishing a parabola. Pretty interesting. EMA moving along with the parabola. Don't really care what it is. I just care that this is a sweet setup. And something like this is what I would be expecting, and thinking that this is a really good time to buy. If we come back for another test of this parabola, kind of create a higher low is definitely something I'd be looking for. And yeah, I didn't have any orders set to buy this or Litecoin, and often I want to wait and see how markets progress. Like if we get something like this, it's gonna be a much better setup than even here. Even though it may be a worse price, the strike rate is going to be way better, and the price is still going to be very similar. So waiting to see how some of these things progress before really blowing my whole load on the exposure that I am looking to take out. I want to carefully and slowly be building that. So yeah, a lot of reasons to be interested in Ripple from a trading perspective, not from a investing perspective. I'll trade alts. I will never invest in them. So I think 0.28 will be a critical level for it. Okay. Seems like the stream is still working. I appreciate everybody who has hung in there, taking a look at the chat, and then we'll be going over some gold miners, which have some really great setups themselves. Okay. Check fib level on LTC chart. Can do. How you doing, Fibbo? It's great to see you here, and it's also been great having you in the Telegram group. You've been providing a lot of great input and responses to people's questions, and that is very much appreciated. Okay, fib line. Looks like fibs I would see is not until down at 61.48. That would be the next fib level that I am looking at. Would like to see it up a little higher, but what are you going to do? Okay. Oh, what's up, Agatha? Giving me a tip. Much appreciated. Always appreciate that. 2 tips. Wow. I really appreciate that. I'm not sure SEK what currency that is, but always think it's cool getting different currencies. Okay. All right. And let's go one more chart to look at before gold miners. Did have a really nice trade on Link that we can go through here. So again, hopefully you guys are starting to see these without me pointing them out. Absolutely one of my favorite patterns in the world. Bam. And there's a number of reasons why it's one of my favorite patterns in the world. This and Wyckoff's are the two that jump out at me. Also love ascending triangles. So a couple of reasons why I like this so much is, first of all, it works really well with moving averages. When you get this W action in here, this allows the moving averages to kind of turn bullish. It would be very bearish trend, and then as it comes down and finds a double bottom, that will kind of flatten it out and get some crosses. Basically, where I look to enter into big W patterns is down around here. That's where I would expect MSR to give us a signal. And then, so there's actually like kind of three entries with this. First, when moving averages cross down in here, let's take a look. Right there, you see? So that's first entry, and that is exactly where I entered. I posted this in the Telegram chat group in real time as the price was right here. I bought it and got a great entry because, like I talk about, we moved away. We got a cross with the price extended, so we looked to buy the first correction, and we got correction here, and then here is where I was looking to basically buy this whole thing. If it would have kept moving down, you bet I would have kept buying. It didn't, so I went ahead and was able to get entered in right here, and like I said, posted that in the Telegram group. So that was great. So that is kind of the first reason why I love big W's, is they will give us some really good signals from moving averages as they cross over. The next reason why I really love them is because it gives us a high probability target once we break above here. So when we broke above here, target became retest of local highs at 458. So right here, target is 458. You can add, you can use that as a signal to enter, add, or just kind of hold. And that's what I did, was just hold. And then I took profit between like right around 450, right here. I wasn't looking for the absolute high. I was selling like 415 to 450. So that position moved in my favor about 100% in about a month. So that's when I'm going to be taking a lot off the table, which I did, probably like 80%, 70%. And now the last reason why I love big W's is because we can get a signal to re-enter. Basically, as I was talking about, we sell when this is resistance, and then we're on guard to re-enter. If we do break above this horizontal, if we break above this, now that gives us our final entry from the big W. And it becomes kind of like a cup and handle, where you would measure from here to here and extend that from the top. So 160 to 480, what's that? $3.20. So yeah, that would be a target of $8 if we can close a daily above, let's say this high. If we close a daily above 490, target's $8 from the big W pattern. What I want to see is a handle. That would be perfect, and I would be looking to buy right in here. So this this would be the ideal setup where first we get our entry here, second entry is signaled here, target is reached, we take profit, and then we look to re-enter on a pullback and or re-enter with a close above this high here, and that gives us a really good risk reward and also good probability. So love seeing some big W's that have reached their targets, and specifically ones that I had exposure to. Okay, time for some gold miners. Oh. Okay. So I think this is a buy. We've got a bit of a Adam and Eve. Neckline here. So beautiful kind of rounding bottom. What else do we have? Bull flag here. Has been confirmed. Target is 2471. That entry was back in here. Was missed. I was too busy with crypto. What are you going to do? Potential cup and handle here, which would be kind of the next entry. Looking for a weekly close above 2028. And this is what I love to see right here. So let's compare this. This is Barrick Gold Corporation. Let's compare it with the price of gold, because it actually looks very similar and like it's lagging behind, which can provide some really good opportunities. So what happened back in the end of 2018, first part of 2019? Let's see what happened. We got this nice rounding bottom. And then we got a bull flag that pulled back and into a golden cross. Perfect setup, and one I took. Definitely bought that. Golden cross with a bullish flag is a sweet setup, and absolutely one that I like to take every single time. So Barrick Gold Corp, ticker GOLD. Rounding bottom. Bull flag, pull back into golden cross. Beautiful. Okay. And sure glad that stream decided to start working. I'm not sure what in the heck changed, but it's nice. Okay. Anglo Gold Ashanti. Always liked that name for whatever reason. I don't know why. Okay, what do we have here? Get my notes back up. almost a broadening bottom. This didn't create a new low. Maybe a signal of strength. Oh, come on. There we go. Looks like it is forming a new bullish channel. Resistance from the 200-month moving average. 1678 is where I'm looking. You got the median of the channel and the 50-month moving average. And what's interesting, it'd be interesting to see if this turns out to be some sort of flag. If it takes off from here and closes above here, I would think that that is the case. So, yeah, down in here looks like really interesting opportunity to buy this guy. It is currently testing the 200-day EMA, which makes this a pretty interesting spot as well. And let's see if we can draw a trend line here. This trend line would line up nicely with my target area. So definitely keep an eye on Anglo Gold Ashanti, ticker AU, from 1650 to like 1725. Let's leave that on there. Let's take a look at Kinross. This looks like a buy. Similar to Barrick. Bull flag, pull back it into Golden Cross. Could also be viewing it as a cup and handle. Cup handle. And let's see here. When we've got a trend line like this and it doesn't look like price is going back to test it, it looks like it's finding a higher low before doing so. That's exactly when I start looking for parabolas. And that's a nice fit. You can see that this action here looks like it's respecting some sort of parabola. So that makes sense right there. This is one, I think it is a buy. We are look how long it's been since there's been a golden cross. It's been a long bear market. We finally established a higher low. We're breaking through some critical resistance here and here, trying to anyways, and we have potentially forming a parabola and have a bull flag pulling back into a golden cross. So going to be buying this. That's Kinross, ticker KGC. Looking at Royal Gold, ticker RGLD. And notice how much different this chart is than the others. It recently created an all-time high. And when you create an all-time high like this, not just like barely make an all-time high, but made an all-time high and followed through. This is nice follow-through. right here, if it would have made this all-time high and then turned around, that's different. When you make an all-time high and get some nice follow-through, like shoot, I mean this thing rallied 40% after it created a new all-time high. That is when I become very, very interested in buying a pullback. That throws back to retest that prior all-time high. So breakthrough, follow through, and then that pullback is a very interesting opportunity, a place that I definitely like to buy. When you create a new all-time high and then throw back to retest it, it's a really good setup. And can we draw any patterns in here? Not really. I kind of just see an A, B, C correction and would kind of use that length to give us an idea of how far we should expect C to be. C should be similar to A, and this would be perfect because a lot of people are going to be looking to buy this throwback to the prior all-time high, and in that situation, two things are going to happen. It's either going to pull up short and never get there, or it's going to get there and fall through and get people to puke out their longs before generally going ahead and you know, continuing on about what it was doing. So this would be perfect if we can have another move similar to this that would get us below prior all-time high, scare some people, but the 200-week EMA would be waiting there for excellent support, and we could also draw on this trend line. So basically anywhere from 88 to 100, even here, I mean 88 to 107 is a really interesting spot to build a position, and that's a situation where if I'm buying 107 and planning on buying 88, I can't be buying much at all up here, or else I'd be kind of handcuffed. If price did come down here, I'd be so underwater that I wouldn't be in a position to add. So would want to kind of start smaller and then only enter larger portions if it was looking like a you know, really good setup. Okay, so that is going to do it, I believe. Covered why I'm buying Bitcoin and Ethereum, and looking at closely at some other alts. Talked about the gold miners that I am buying, and this is one of them. Kinross and Barrick are the others. If I'm remembering correctly, there's yeah, hopefully that is, I'm remembering that correctly. I believe Anglo Gold is the one I am waiting for further pullback. Yeah, that's correct. Okay, so one last look at the chat, and then I will call it a day. And my stream quality is back to bad, so it looks like it's good timing. XRP equals 0. That would be beautiful. Carol Hutter asks, great last name, my best friend from college shared that name. I'm not a trader, but I'm interested to learn. Would you just buy BTC/ETH and HODL, or try to learn to trade in the time available? Well, it just comes down to your personal situation. If you have a desire to learn how to trade, then I'd absolutely encourage you to learn how to trade. If you really don't have a desire, it's just not something that you're really interested in, or maybe you don't have enough time. It's a huge time commitment. If you're going to commit to learning how to trade, you're going to need to commit a huge amount of time. And if you're, just kind of going to half-ass it, thinking that that's going to make you a bunch of money, I hate to be the bearer of bad news, but it isn't. So if you're really ready to roll up your sleeves and commit a big chunk of your day every single day to this, then absolutely, I would strongly encourage you to learn how to trade, and I would tell that to anybody who has the interest. But most people, they think they kind of want to learn how to trade, but the reality is they just want to just make money, and they're not really interested in putting in the work to learn how to trade. And there's solutions for everybody, and hopefully I can help. Basically, I have shared earlier in the show 2 articles that you can find at the top of every TradingView post that I have. How to buy the dip and advanced dollar cost averaging strategies. If you're just looking to build a position long term and just be in Bitcoin when it's in a bull market, then here's 2 great options for buying a dip and holding on to that and knowing where to kind of exit if it moves against, or just saying I'm just going to dollar cost average. I share multiple strategies in each post, and that will be a really good place to start. And then beyond that, once you're in a position, it's very, very important to me to know when to get out. And for me, I never want to be in a I always want to bet with the trend. I never want to be buying when the trend is bearish, and if I'm long, I definitely want to be taking profit when the position turns bearish. So if you say did a really good job of buying the dip back in here, that's only half of the equation. The other half is actually taking profit before all of this happens. If you are not just looking to build a position and hold on to it for years, if you're actually looking to move in and out of a market, I strongly believe that you need to be figuring out how to bet with the trend. And when the trend's bullish, you want to be in. You want to implement dollar cost averaging approach, yada, yada, yada. If the trend's bearish, you don't want to be buying. You want to be selling. You want to be taking profit or waiting for the trend to turn bullish. And I've got MSR pulled up here because it can be used for a number of things. It can be used to signal entries and exits, but it can also be used to identify the trend. If it's on a buy signal like it was right here, we can't really see it for whatever reason. There it is. If it's on a buy signal, that tells you the trend is bullish. So you can use that to identify the trend and say, okay, trend is bullish, time to start buying, and I'm going to hold on as long as the trend stays bullish. And then once we get a close long, and especially once we get an open short, that tells us that the trend is no longer bullish and we do not want to be exposed to this to the long side anymore. So now it's time to start selling and taking profit and waiting for the trend to turn back bullish like it did down in here. So this is just a really great tool that can be used as a way to identify entries and exits like I do, or it can be used as a way to be really good at identifying trend. Like a lot of people, just think back to up in here. How many people said that we are now in a bear trend when price was up here at 11,000? Nobody out there was telling you this is a bear trend. Even though we just got a lower high and a lower low, nobody, I'm sure people, but nobody that I came across was saying, okay, bear trend, time to be out, time to quit buying dips, time to start selling bounces. MSR did, and an excellent job. It did get choppy, and that'll happen, but at least it did a great job of identifying the reversal in the trend and getting you out of this long exposure. So if you are either going to be buying the dip or dollar cost averaging, I strongly believe that you need some method for getting yourself out before the trend fully reverses. And if you want to learn more, I can't believe I still haven't put a link. Yeah, I think I probably have put a link in the description to Sawcruhteez.com, SAWCRUHTEEZ. Come here if you're interested in learning more about kind of what goes into it and how it can be used. I'm working on some really great updates for that as well. And then if you are interested in that, know that it does come included for the Consensio workshop that I will be doing here in Vegas at Unconfiscatable. So if you sign up for that, register and pay for that, then you will get access to the indicator, the MSR indicator. All right, so good question. Thank you for asking. And oh wow, got a tip from Kevin. Thank you. What do you think about liquidation candle on Bitmex for XRP? Do you still trust trading XRP on Bitmex while it lacks liquidity? Great question. No, I do not. I only trust on Bitmex Bitcoin USD and ETH USD. The liquidity outside of those two pairs is not sufficient for trading even small position sizes, because what we saw yesterday is what happens. I have experienced that myself. I'm remembering, I'm just going to pull this up for posterity's sake because it was very frustrating and a big learning experience for me. Last time I traded any alts on Bitmex, outside of just kind of trying out some things, was slam dunk short that I had on ADA. So just the most beautiful bear flag that you're ever going to see in a big bear market, that was just an absolutely textbook setup with huge risk reward potential. Didn't reach the target, but basically I was looking on, I sold here and had my stop set up around here, and great risk reward. And what happened was what we recently saw on Bitmex, where on XRP, where basically the exchange goes down. Maybe it goes down, maybe it doesn't, but what happens is, like, you get a 1 minute candle that basically went from here up to like here, liquidated everybody. Everybody didn't have a stop in place, and then immediately proceeded to go down. So that was very, very frustrating, especially as I watched all of this profit that I would have been making. I mean, that thing just absolutely dumped big amount, 60%. Watching all that just go right out the window because I got a flash wick that literally just went like up here in a minute and then all the way back down and liquidated everybody. Stopped me out of my position. I got lost, and I never should have. I should have made a lot. So after that experience, I realized that I need to stay away from anything that isn't Bitcoin USD or ETH USD, because I've never seen that happen on those pairs. It could, and it probably will, and it probably has, but I've never seen it, and therefore I trust those pairs, and I do not trust the lack of liquidity in the other pairs because that type of thing does happen. It used to happen a lot more than it happens now, and it's a situation where I don't seeing that is super fishy, super suspicious, and makes me really not want to it makes me not feel good about trading on Bitmex. You know, when they're treating customers like that, it is not a company that I like doing business with. But the bottom line is, I don't like doing business with any crypto exchanges. There isn't any good ones out there as far as I'm concerned, and therefore I just have to go with the one that is kind of the least bad, or the most, you know, the least bad. And I do think that that is the case for Bitmex. I definitely like the functionality, and I also like that the liquidity in the Bitcoin and ETH pairs. I have tried out Bybit, and it is interesting. I am definitely inclined to think that they may be a more honest operation, and therefore somebody I definitely want to give my business to, and I have started to affiliate for them. Both affiliate links are below in the description for Bitmex and Bybit. Problem, at least for now on Bybit, is that to trade their alt pairs, you have to hold that underlying asset. So if I wanted to go short XRP, I need to have XRP in margin, and that's a big problem. Like if I don't want to have to hold every different coin just to be able to trade it on margin at a place like Bybit. That is not, and they are fixing that as far as I can tell. I talked to somebody and it sounds like there will be an option to use USDT for margin soon. And in that case, I'm definitely going to be giving it another try, and I might be moving some of my operation over there. So yeah, probably much longer answer than you wanted, but that's basically in a nutshell why I will definitely not be looking to buy to long XRP on margin on Bitmex. Instead, I'm just looking at buying spot. And in that case, a liquidation wick like that will have no effect on me. And another tip, thank you guys very much. Most tips I've gotten in quite some time. Ollie Atari asks, if Bitcoin follows your chart into the halving, will the alt suffer or ride the wave with Bitcoin? Great question. Something I've been thinking an awful lot about, and I have been very bearish altcoins leading into the halving. Really expect bearish altcoins versus BTC leading into the halving. Bullish alts versus USD. Really expecting Bitcoin to take off and leave alts in the dust as it leads up to and follows the halving, because its supply is going to be decreasing and alts are not in the large majority of situations. Therefore, just very basic, supply and demand fundamentals should tell us that Bitcoin should out-return coins that aren't having a decrease in their supply. That makes all the sense in the world to me. And furthermore, that's what we've seen in the past, where Bitcoin starts the bull markets, it takes off, it leaves alts behind. Alts maybe rally a little bit against USD, but they get dumped on versus BTC. And then after Bitcoin makes big moves and then it consolidates, that's when alts kind of try to catch up. But they don't catch up as much as it's just kind of a correction. So that's exactly what I've been expecting, and the charts have been proving me wrong, specifically Aetherium over the last couple of weeks. So, strong opinions loosely held. I strongly had that opinion. I still think that makes the most sense, and that this last action may have just been some sort of trap to get people out of their Bitcoin and into alts before the halving. But as ETH continues to pump against Bitcoin and test that critical horizontal, I am paying very, very close attention. I don't have a strong opinion either way. If it gets back, if ETH BTC gets back above 0.026 and stays there, then I think alts are going to outperform BTC over the following 6 to 12 months. If it rejects 0.026, if it rejects that critical horizontal, then I will be strongly expecting Bitcoin to leave alts in the dust over the next 6 to 12 months. Okay. And let's see here. Again, really appreciate the feedback, the tips, the questions, great questions. Last one to end it off on says, funny how Tone hates the shitcoins that Sawcruhteez is trading. Yeah, I mean, I don't think it's necessarily funny. It's just I hate them too. I think it's very important to understand, for people to understand that you can hate something and still be long it or still buy it. It doesn't matter for me what I think about things. It matters what signals I'm getting, and it matters what setups I'm seeing. It doesn't matter what the ticker is. What matters is the liquidity. So if there's a market with good liquidity that's providing a really good setup, then I'm not going to pass on that just because I feel one way or another about something, or because I don't like something. Whereas if you think about Tone, he is not actively trading. He's just doing full-time videos and teaching and that sort of stuff. So in that situation, for him, it doesn't matter what signals are getting, because he's not going to take them. No matter how good the signal is, he's not going to take it. But no matter how good the signal may be, the underlying asset is still shit. So that's all that he really cares about. That's all that he talks about, and that's quite all right. He does a great service to the community by telling people why Bitcoin is the only crypto that has value. He does a tremendous service to the community, but just because I agree with him, probably basically that all altcoins have no value, I have no argument with him there, but that isn't going to keep me from trying to profit from what I think is potentially life-changing opportunities. And that is a great way to go ahead and conclude the show. Went on for a lot longer than I wanted, and had some technical difficulties, but there was a lot to talk about, and I appreciate everybody for tuning in and for listening all the way through, for putting up with the connection issues, and for contributing in the chat, leaving comments, for clicking the thumbs up, for subscribing, and for sharing on social media, sharing with other people that you think may enjoy my analysis. Really appreciate you guys. Has been going well, and oh, I forgot to mention, meant to talk about at the top of the show, but I'm going to be out of town for a while, so don't expect any shows over the next couple weeks. After Unconfiscatable, I am going to Austria for a ski trip, then I'm going to Belgium, and then to Amsterdam, so getting to do a lot of really fun traveling, and that will keep me away from YouTube for the most part, and I will do my best to share analysis on Twitter and potentially TradingView, so keep an eye out there. And after I return from my trip, I will get back to trying to stream once every week. So thanks again for tuning in. I will catch up with you guys next time.